Hey, TikTok, Jim Malone here. I'm broadcasting to you live on Dallas Trading Floor. I'm also on Facebook at facebook.com/Dallas-Trading-Floor. I'm on YouTube, youtube.com/Dallas Trading Floor. Also on Twitch at twitch.tv/Dallas Trading Floor. And I'm on Periscope, pscp.tv/Dallas Trading Floor. So here we are. It is the market's off definitely a little bit today, but it's still amazingly strong. And it's just it defies belief. Just wanted to show you a chart on the market direction. The market direction is definitely still in a confirmed uptrend. And so, here we go. We're over 10,000. This is the important number on the NASDAQ. The S&P, the Dow Jones, and the NASDAQ are all down today, but we're still over 10,000 on the NASDAQ. So we are definitely in a confirmed uptrend. And so it's still not time to be short. It may be time to be shortly, but not right now. Just wanted to show you some of the charts that I think are important. The first being the SPDR. The SPDR is the largest ETF. It's worth about 220 billion with a B dollars. Many people's retirement funds are in this, and this is a very key fund. It's an ETF, so it includes all of the stocks basically that are in the S&P 400 and also in one ETF. And it's real interesting. As you can see, it's been moving kind of a little bit sideways, but it keeps bouncing off the 40-day moving average. The low here that I'm showing you, this was when it hit basically 218, and it's been up and ever since. So it is still above, the 300 level. I think is a very key level for it. I was thinking it was going to bounce and go to the back and retest the lows when it hit 275, but boy, was I wrong. It's just continued to go up. It's now at 316.17 when this slide was taken earlier today, and very good volume, but it's still a little bit down from where it normally is. This is the largest traded ETF in the world. So it's a very good indicator of kind of what the general sentiment on the market is. And right now, the sentiment is still bullish. Want to also show you the QQQ Trust. Now, this is the NASDAQ 100. It is up today. This has been leading. This has been the dog that's been leading the pack. And, it's up. This is something that you don't want to fight against. So please, if you're considering, buying something like the SQQQ right now, don't, because until this moves in the opposite direction, you just don't want to fight the tape. The QQQ is moving higher. So I just wanted to show you that really quickly on the screen. Very, very important. This is the largest ETF that covers the NASDAQ 100. And basically all the good stocks are in this one. The stocks like Amazon, like Microsoft, like Apple. About the only stock that I can say that's really hot right now that's not in this is Tesla. And that's a very interesting story, and I'm going to be covering a little bit of that later. Basically, Tesla, may become part of the S&P 500. There's a technical hurdle that it must get over. It has to have 4 consecutive quarters of profitability, and it's looking like that's going to happen. So hold your hats. When that happens, more than likely Tesla's going to go higher because all the index funds will then have to buy the shares. So be looking for that. But right now, the Qs are headed definitely higher. Also wanted to show you the laggard of the 3 of the major indices that I look at, and that is the Diamond or the Dow Jones with Dow Jones 30. Now, there's only 30 stocks in this, and typically the very biggest stocks are in this one, the Boeings and the like. It is down today. No surprise. Some of the, there's a lot of weakness in some of the Dow stocks. These are typically the big industrial companies that have been having and struggling lately. The people that have done what they call value investing have not done quite as well as the people that have been invested in the stocks that are in the QQQ, which is the Nasdaq 100. So I definitely want to show you the diamond. This is something that covers those Dow 30 stocks. Now, getting to the kind of the little presentation that I have today about Tesla, I just wanted to show you this chart. It's absolutely amazing. When this chart was taken just about 30 minutes ago, Tesla was above 1,400. Basically, last week, it was under $1,000. It was right about $1,000. And I don't know if you remember, but I showed a slide of the breakout point approximately at 1,000. Kind of wanted to show you that here on the chart, about right here. When it broke through that, finally, as you can see, it railroad tracked here a little bit, and then finally it pushed through that. And when it did, boy, it is just like a jack in the box. It's just going up, up, up. And not only is it going up tremendously, it's up $30 today, but, and this is the important thing, the volume is increased. So, there may be, there is some people that think that, we may be in for Tesla going even higher than this. It would be very, very hard to imagine that, but, we may be in for that. So it's, it's a kind of a very interesting, it's a very, very interesting thing about Tesla. Just wanted to show you this, kind of some of the stuff that the press has been writing about Tesla recently. And I just think this is really important because, basically the analysts now are saying that Tesla could be at the 2070 level in the very near term, which would be absolutely amazing because it's basically been up 165% in the last 3 months. And now, and this is absolutely amazing, Tesla is now larger than the market caps of Toyota, GM, and Ford combined. And this is something that you just have to be really, this is a change. This is a sea change in the market. Part of the reason I think that people are flocking to Tesla, of course, is the electrification. But we are coming into a period when growth is going to be very hard. A lot of people have money in bonds that aren't paying anything. They have to go into the market. And where are they going to go? Well, they're going to go to where they can get the return. Well, there's just not a lot of places that they can get this kind of return. But Tesla probably is that one of those places that they can get that kind of return. They have a completely full order book, and they are not, at this time, they are absolutely not for lack for orders. They are literally selling everything they make. So that is a tremendous thing. And basically, we may have an industry that has to totally retool, and they're about 5 years behind. So this is the reason, I think that you're seeing this movement into Tesla. It's one of the greatest consumer plays out there because there just aren't that many things that people can buy that have this kind of size. The addressable market in the automobile industry is absolutely huge, and it definitely is an area that here is an addressable market that is coming on, and Tesla is possibly going to go over $2,000. I know that's hard to believe. I couldn't believe this initially when I bought in right under 1,000. I had been buying and selling it. I actually today went in and I bought back all of the options that I had against the shares that I have, because I don't think that I just can't figure out where it's going to go next. It may go down, but I typically don't think that's going to happen. I think it's going to go up, even up above 2,000. So, I wouldn't be surprised at this. The reason, of course, is the addressable market. It is growing very, very fast. They're saying it's going to be 6 million units by 2030. Basically, the estimate up until now has been about 4 million. Well, I think they may be there even quicker than that. Interestingly enough, while Tesla's order books are completely full, the big four, General Motors, Ford, Fiat Chrysler, and even Toyota, their sales are actually going down. And this is amazing because, this is a tremendous addressable market. So just wanted to kind of jump in with that. And let's see, have some questions here. All right. Excellent. Okay. Well, thanks for talking. Thanks for taking a look, Arnold. Definitely appreciate it. And also Wendy in Calgary. I really enjoy having you on the show. So here we go. Okay. Oh, hey, great. And looks like I got a recommendation about KL. This is basically what Grandpa Paul says. And I'm glad. I really like it when some of my predictions come true. Grandpa Paul bought KL, you suggested a while ago, after it hit the $43 mark, and up this morning, and it's up 2%, which I do think. Here's the thing. I think that the demand for gold, gold is kind of inching up to the $1,800 a share mark. I mean, an ounce mark, and the demand seems to be going up for it. So, the gold miners are going to do well. Here's the thing about the gold miners, though. Not all the gold miners are created the same. One of the ones I really like is KL, Kirkland Lakes Gold. It's a Canadian company, but they do primarily, they are in business in Australia, and they have excellent mining operations, and they are absolutely a leader. And I do think that their demand for physical gold is probably due to go up based on the spot price for gold that I've been seeing. It's about 1880 on the spot price for an ounce of gold, but what's happening is it's going up to about that 1880 level, and it's backing off. When the price of gold moves beyond 1880, which I think is likely in the latter part of the summer, then all bets are off. Then we're going to go to an inflationary. We're going to start to see a little bit of an inflationary bubble, and some of the gold plays may be good, but it may be a little bit early to be in gold. But I would be in KL because I do think it's a quality company. I do think they have a low cost of production, as well as just an excellently run company from all standpoints. So it's something that might work for a lot of people out there that are interested in protecting their portfolio against potential inflation. Now, I just wanted to kind of flip back to another really interesting area that I think that everybody this is sort of a trend that I'm seeing out there. Telemedicine. This COVID-19 thing has basically put forward that a lot of people can't go into the doctors because of restrictions. So telemedicine is sort of a godsend. Now, there's a number of companies in this. The primary company that I am invested in is a company, TDOC, TDOC, which is called Teladoc. They have about 3,000 physicians on staff that can diagnose various things and even write prescriptions online. And interestingly enough, the hospitals and many of the large providers like McKesson are having to turn to these companies like Teladoc because they themselves don't have this capability. So this is an area, I think, of tremendous growth. Teladoc stock currently is a little bit above the 203.95 entry point. That's I entered a little bit higher than that. My entry on this stock was just about, I think, 203. I think it's about 203.50. I was just right about on the entry point. Basically, it has the entry point is just a rule of thumb because you have basically a 5% leeway either way is a good place to go with that. But as the quarantine goes on, there is a lot of interest in this. And the way we can see this is because this is a graph of Google searches here. Basically, telemedicine for years was just kind of in the doldrums. Nobody was interested in it. And then all of a sudden the COVID-19 thing hits. Boom, look at the spike up there. So there's a lot of interest in this area. And I think that, it potentially is going higher. It has a very nice chart pattern, and I kind of want to show you that one. I want to show you the chart next so you can kind of see that chart pattern. And here's the chart that I have on it currently. And that basically is, basically the entry on this is about 203.95 to 214.14. That's basically the entry point. As you can see, there's a gap up here. This is the weekly chart. This is the one you always want to look at to see where to buy. As you can see, it's up above its higher high, and that typically is a good place to buy. The composite rating isn't a 90. I typically like 90 or better. It's an 89, pretty close. I typically try not to buy anything under an 80 on the composite. This one's an 89, so it's quite good, but not necessarily the very, very best. in that. But I do think it is probably moving higher. I just kind of wanted to show you that one as well. Now, the other area that I think is very hot area right now, of course, is the 5G area. And I want to show you a stock, and you might want to put this on your watch list because I do think that this one has legs as well, especially because what's going to happen here when the iPhone comes out, the new 5G iPhone by Apple, they're going to require a lot of RF chips that are in this chip, about 5 of them on each one that is produced. And there is a leading company that produces the bulk of these. It's called Qorvo, QRVO. It basically has a composite rating of 95. That's a little more like what I like to see on a composite rating, over 90, 95. Basically, this is in the top tier. It was up today. It's trading at 114. The chart is basically, as you can see, it's a V here. This is the down. This is when it went down when the market went down, and then it turned at March 23rd, and then it's been consistently going up. It's sort of stuck right here. This is sort of a handle. I suspect that this is probably going to go higher in the next 2 to 3 weeks. Here's the reason why. This is the demand for 5G smartphones. As you can see, it's going to go way up, and this is the demand for the components, the Qorvo components that go into these 5G headphones. And by the way, it's not only for the Apple phones. That's just the biggest of them. Samsung Galaxy is also a buyer from this company, Qorvo, QRVO. So definitely want to possibly watch list that one. I think that might be something that would work really well for you. Just in lieu of full disclosure, I want to show you my current holdings. I've dropped a stock today. I sold my positions in Microsoft as well, and bought, and I sold out Microsoft, not because I didn't like it, but because I needed more room in my portfolio to buy more Tesla. As you can see, Tesla has been doing quite well. It is up significantly from the $1,000 breakout at $1398.61. I also have Netflix in my portfolio, Viva Systems, Vertex Pharmaceuticals. I'm probably going to be dropping Vertex on Friday, Teladoc Holdings, and then I have 2 kind of smaller holdings. One very, very small speculative holding, Blink Charging. This is a company that makes it's a very small company. It doesn't normally meet my criteria. I only bought 100 shares of this one, but it is sort of it's highly speculative, but they make charging stations for electric vehicles, which I do think is a big area. It's up in terms of volume, 333%, but it's down on price. I purchased it yesterday at $640. It's up slightly from where I bought it, but again, not a stellar performer. What I like seeing here, of course, is the volume being up so strongly. Zynex is also a drug company as well. It's down a little bit, and that is my current holdings for now. So I kind of wanted to show you that. So let's see. I take some questions here. I'm in Tesla options at 2100 strike 31st. Plan on getting out before earnings. I think that's very, very smart. I think that's very smart, Arnold. I do think that I don't think you want to hold an option on a Tesla through earnings, just because I do believe that we may be in a situation where it disappoints slightly. I'm not expecting that, though, by the way. But there is a lot of gravity. You have to go up sometimes. 2100 is a fairly high strike price, but you probably got it at a very good price. It will move in sympathy for the stock, but I would sell it probably before earnings. I think it's very, very wise. And by the way, if anyone wants to get on Tesla but doesn't necessarily want to purchase shares, I think that's an excellent way to do it, and that is by buying the option. But please give yourself a little bit of a ramp. It's a little bit tight in terms of the July 31st. That's a little bit tight. When you're buying options, you have what they call the decay as it gets closer to the options expiration. The extrinsic value of the option goes down. So it's sort of like a ticking time bomb. If you don't reach that strike price, it does lose value. So be very, very reticent of that. I typically like to buy them out a little bit longer 2 and 3 and possibly even 6 months. The only problem with Tesla is all of those options are higher. So I know you're kind of boxed in because the the options are saying, at least from what I can see, that Tesla's going higher and probably much higher. But I think it's a really good idea to get out before those before the earnings. I think it's real smart on that. And thank you very, very much. By the way, for everybody out there, I just wanted to that's on TikTok. I do have a TikTok may be banned in the United States. I hope this does not happen, but they're looking like it might happen. If it does, you probably want to move over if you want to continue watching this, because I'll be on YouTube regardless. YouTube.com/Dallas Trading Floor. I'll be there for good, so you'll never have a problem with that on YouTube. But there may be some issues with TikTok being banned in the United States. I also wanted to say, for people that are watching on Facebook, YouTube, Periscope, and Twitch, you can easily join my stock alerts, which are free. It's DallasTradingFloor.com, and just go on there and just sign up. It's totally free, and anytime you want to drop, that's great. But I do send out trade alerts, and sometimes they actually could make you money, like the trade alert that I had on Teladoc, which I think is done quite well. I typically eat my own dog food, so most of the trade alerts I'm going to be executing on almost for sure, just depending on how it goes. I typically will, the night before, calculate the trade, send it out, and then depending on how the market opens, then that's how I'll do it. Typically, I only buy on an uptick. It's just a rule that I have that's served me well. So, but the trade alerts come out. Basically they're infrequent. I mean, they come out. Sometimes there's 2 in a day. Sometimes there's only 1 on a week. So it just depends on what's happening. But always get on the trade alert list so that you can see some of those things, because it's kind of fun, and there's a lot to see there. So let's go to the TikTok people, and I've been neglecting them. That's terrible. NVIDIA is a great stock. I've been in and out of NVIDIA many times this year, so I do think it's really, really good. It's NVDA. NVDA is the symbol on that. Basically, the reason NVIDIA is such a good stock is because of the GPU, the graphics processing unit that they have. It's fabulous, and it is the thing that makes every not only gaming run, but it makes AI run too. So it's just a tremendous area there. Right now it's at $395.62, up $2.05, or approximately 0.5%. It's a composite rating of 99. Folks, it doesn't get any better than this. This is the best composite rating that you're going to get. A very, very nice chart. It's a little bit extended probably from where I'd want to enter it. The entry would have been, about the 370 area, but I don't think you're going to do badly owning this stock. I do think it's a winner. It's number 1 in this category for semiconductors, the fabless. And what this means is that basically some of the semiconductor companies, a lot of the semiconductor companies don't actually build their own hardware. They actually farm it out to companies like TSMC, Taiwan Semiconductor Manufacturing Corporation, Texas Instruments, and other companies like that. But they own the designs, and this is a very significant company that does that. There are other ones in this area, Cirrus Logic, NVIDIA, all the ones, but NVIDIA is definitely the leader in this group. So I definitely wholeheartedly recommend it. If you're in this and you have profit, I would wait until you have a 20% profit to start selling for profit. But I do think that NVIDIA is an excellent company, and I think that's a really smart move to be in that stock. Bought my first stocks yesterday. Killer. Awesome. Apple. Here's the thing about Apple. I love Apple, but the problem with Apple is everybody owns it. And so I don't know, but again, the thing about Apple is AAPL. The thing about it is that everybody owns it, but that doesn't necessarily mean it's bad. It's not as high a composite rating as I like to show, but it's still excellent. So let me show you the weekly chart for Apple here, and blow that up here really quick. And of course, everybody knows their products with the iPhone and everything like this. And it is in a situation where when the new iPhone comes out, I think it may even go higher. But currently, this is the weekly chart, as you can see. Very nice action from the low that we had here on March 23rd up, moving well above the 40-day moving average. It's well above the 200-day moving average. Relative strength of 91. This is really, really excellent. It's up $8 today at 372. Wow, that's amazing. Because I was in this at 240 up to about 285, and boy, I should have held on to it. I sold. Probably shouldn't have. It's just continued to go up. So, you can't hold this one down. I do think this is one of the marquee stocks. It's one of the most profitable companies in the world. And I think with the new iPhone coming out, I think it may even be better if that can be if that can be done. So I am also very high on Apple. And of course that's not it's not unusual. Now, here's one thing I want to point out really quickly to everybody, and this is on earnings. If you're not already in the stock, maybe I would hang on until after earnings. The earnings date for Apple is July 30th. And I do expect they're going to have good numbers, but the thing about it, when you hold it through earnings, you can be disappointed. I typically don't like to buy any stock right before earnings because, that old adage, buy on rumor, sell on news. Well, sometimes even the best news can move a stock down. So I would be a little bit careful adding to. If you have a position, I would hold it, but anytime you're holding something through earnings, you are taking a certain amount of risk that there will be a reversal in the stock. So just wanted to show you that the earnings dates are going to be 7/30 for Apple. But excellent stock. The chart is excellent. It is a 90 composite rating, which is not 99 or 95, but it's still just tremendous and cannot be underestimated as a company. Okay, let's see. Open your YouTube. Oh, okay. Leads of. Oh, okay. Yeah, I have a lot of videos, by the way. Now they're mostly my shows on YouTube. Again, it's youtube.com/DallasTradingFloor. And if you do go there and take a look at there, please subscribe, please like me, or whatever you're supposed to do. Smash the like button. I see it on all these other videos. I don't have the graphics up yet. That's coming, hopefully, to my show. But do subscribe to me because it's really great. And by the way, if you don't want to do that, I don't want to depend totally on the on that. You can just sign up directly for my stock alerts. And by the way, if you're looking on TikTok, it's very easy to do this. Just go to my profile, hit the link button. It takes you right to a subscription form. Just put your email in, and you're on the list, and you get the free the stock alerts. Also, if you're on Facebook, YouTube, Periscope, or Twitch, the web address is www.DallasTradingFloor, and just type in your information, and you're good to go. And if you have any questions that you want to ask offline, I'm going to be trying to take the questions offline so that I can give you a probably detailed slide on them on the show. Because if you have a question, probably somebody else does too. So if you could do that, the way you do that, you should go to www.DallasTradingFloor and just go over to the ask a question, and then put the information in there. I'll get it and then put it up and probably on the show. So that's how I do it with that. Okay, so let's see. What's a good program to use to trade? Well, you know what? I think the first and most important thing is to kind of understand chart patterns. And hopefully I'm going to be making more videos on TikTok and other places about chart patterns, but this can help you a lot. Where you can find out about chart patterns is there is a book, and it's probably available in any half-price bookstore, called How to Make Money in Stock: A Winning System, Good Times or Bad, by William O'Neill. Buy this book; it's well worth it. You can buy it used for about $8, even on Amazon. It's probably $6 or $7. Absolutely worth it. It's far better than books that cost 4 and 5 and 10 times as much. It is the basis of really modern trend trading. And if you understand the language of the different charts, and the different things that William O'Neill talks about in this, it will be of tremendous use to you. You will make money trading stock if you understand this system. This is the system that I use. It's called the CanSlim system, and it is easily learned. I mean, obviously you don't become a master at it overnight, but believe me, if you read this book through and really and look at it, you're going to be ahead of about 80% of the people out there, and you're going to be making money, and everyone else probably is not. So definitely want to take a look at this book called How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill. And that is just a tremendous thing to take a look at. Okay, so let's see now. Next question. Okay, is there E-Trade anymore? Well, actually, E-Trade was purchased. I can't remember by who. I should know this offhand. E-Trade was purchased, and it's going to be merged. I personally use TD Ameritrade only because I think it's a very good platform, and they have a platform called Thinkorswim, which lets you buy and sell options and stocks quite easily. Also, I think Charles Schwab is excellent. I think you ought to be a little bit careful with Robinhood. They do have some execution problems, and sometimes it's hard to place stop losses on them. But you can do almost everything with Robinhood. You just want to be a little bit careful about Robinhood. Now, if you're looking to buy fractional shares, and I think this is really great, if you're looking to buy some of the true winners like Tesla or Amazon, you could buy fractional shares, and they're available, of course, through Robinhood, but they're also available through Schwab, and I think that's a way that you might want to participate in some of the truly transformational companies that are happening right now. So that is an idea there. Okay, so I've been about three times this week in the cryptocurrency is like Bitcoin. Okay, here's the thing. Let me show you an alternative to trading Bitcoin. The problem with Bitcoin is not Bitcoin. The problem with Bitcoin is it's tough to transact. It's tough to transact. So there is an ETF. See, Greystone, GRASTONE. I think it's GB. See if that. Grace. It's GBC. Hold on. GBC. I think that's the symbol on it. I cannot remember on this one. It's Greystone Bitcoin. It's Greystone Bitcoin Trust. The name of it. Let me see if I can get the symbol on that. Gosh. Should have this right at the top of my fingers because this is a good one. Yeah, GBTC. So let me put that up there on the scene really quickly here for you. GBTC. This is a way that you can trade Bitcoin with the ease of a ETF. And this is the way that I would be trading. I'm currently not trading Bitcoin, but I do understand the people that want to be trading Bitcoin. Here's the problem right now with Bitcoin. I want you to take a look at this chart. This basically tracks. This is about 4% of all the Bitcoins in existence are in this this trust, this GBTC. It is a ETF that holds Bitcoin. Here's the problem right now with Bitcoin. It is not a good time to buy it, and the reason it isn't is because, as you can see, it's trending down. You don't want to buy a stock or an ETF for that matter if it's falling below, if it's trending downward. You want to see an upward trending motion. Currently, it is trading below the 40-day moving average. Now, if this turns around and it moves back over about $13, then it's possibly a trade. But right now, it's not. It has relatively low relative strength, and it is trading below the trend line. So if you're looking for a Bitcoin trade, I don't think it's a good time. This is a good proxy, by the way, this GBTC. If you're buying Bitcoins directly and you want to kind of see, should I buy it or should I not buy it? How do I make that decision? Take a look at this one. Take a look at this chart. This follows almost exactly the Bitcoin market. Right now it's trending down. I'm not saying it's always going to trend down, but that is a way that you can tell, and you can be better prepared. Typically, if the market for Bitcoin is trading up, the GBTC will trade up as well. So you want to look at the chart on GBTC before you buy Bitcoin at all. That's my thought. Okay, so let's see. Where do you think Microsoft goes in to on? Where do you think Microsoft goes under? Do you think it goes under? Let's look at Microsoft. By the way, I just sold my Microsoft this morning, not because I didn't like it, but because it hit an all-time high, and I think it's going to retrace a little bit. I'll probably be back in Microsoft. I'm in and out of Microsoft all the time. I do really like the stock. Yeah, it's down a little bit. So let's look at it right now. I sold it at this morning at about 211 was my price on it. And I see that it has retraced. So let's take a look at the Microsoft chart here. Very, very nice chart, of course, on Microsoft, but it is retracing today a little bit. It's down about 0.5%, not a whole lot. It's got a tremendous composite rating of 98. The only thing about Microsoft is it is sort of priced to perfection. I'm not saying it's a bad deal, but you're not going to get the kind of upward momentum that you're going to get on some of these other stocks that are breaking out. It is not breaking out right now. The pivot point on Microsoft was, I believe, about 285, 280 to 285 was the pivot on this one. It is, and you can see that here in the chart. This was the pivot right here, and it's moved up from the pivot very nicely, but it is extended. So right now, if you're just getting into Microsoft, probably not the best time. The interesting thing about Microsoft is it's so widely held that it's probably not going to retrace a whole lot. But again, you never can tell because it is extended above the proper buy point. I did sell for full disclosure. I was holding it on Monday. I sold it this morning, and I'm out of the stock. Not because I don't like it. It's just because I think there's other places that are moving a little bit faster in the market, at least for me. So that's why I'm out of it. Okay, what's the book and the book's author again? This is a book that I think that if you're interested in stocks, you should consider reading this book. It's an easy read. It's got lots of charts in it. It's called How to Make Money in Stocks: A Winning System, Good Times or Bad, and it's by William O'Neill. And I think it's in the 3rd edition now. It is absolutely a classic text. It is worth its weight in gold. If you learn how to analyze stock, when to buy them, when to sell them, what the rules are, you're going to be ahead of so many people. It's not a hard read. It's at almost all half-price books I've ever been in. They have at least 2 or 3 copies of this thing. It's also available on Amazon. You're not going to pay more than, and don't pay any more than $10 for it. It's in paperback. By the way, William O'Neill is one of the greatest investors of all time. He's still alive. He was the man that started the Investor Business Daily. He's also, when he was in his 20s, which makes me feel really bad, really old, but he was one of the most successful stockbrokers, and he was able to purchase a seat on the New York Stock Exchange when he was still in his 20s. It was an absolute record at the time. William O'Neill wrote the book, How to Make Money in Stocks: A Winning System for Good Times or Bad. Let's see. Thinkorswim and okay. Okay, very good. Okay, GBTC. Okay, GBTC. Sorry, I should have had that one up. Oh, okay. What's the book? All right. GBTC. Okay. I sold at 203. Oh, nice to have chunks of change. Absolutely. Okay, Investor Business Daily. And okay, great. So let's see if I have any more questions and comments. Great. Okay. Question on Marvel, MRVL. For folks that are looking on TikTok, I'm simulcasting on YouTube at youtube.com/Dallas Trading Floor. So let me go ahead and pull up that chart. It's MRVL. This is one of the semiconductor groups. By the way, we're in a semiconductor super cycle right now, which means that the semiconductor stocks are very, very good places be looking for potential stock gains, because we are in a cycle, a refresh cycle that is really powerful right now. Okay, so let's show the Marvell stock. Here we go. This is the daily chart. Always try to look at the weekly chart. I'm going to switch to the weekly chart here. The reason is that's going to give us a better setup and give us a better idea of sort of where the chart is headed. So let me just blow that up a little bit so we can see that on the screen, and hopefully it'll give us yeah, there it is. There it gives us the chart. All right, it's basically in a consolidation. This is a handle. It's not a true cup. But it is definitely, it looks like a 3-week tight here. This is another chart pattern. There's several very auspicious chart patterns. One of them, of course, is the cup and handle. That's the favorite one. That typically is the best one. But then there's another one called the 3-week tight chart pattern, which is excellent, and it shows potential movement up. So let's look at this a little bit bigger and more pronounced on the weekly chart. Yes, it definitely has 3-week tight here. Each one of these bars is a week. It looks like it's going to break out of this range here. As you can see, it's moved up a little bit. This is right. This will probably, in the next 2 weeks, probably break out of this pattern, this 3-week tight pattern. And I think this is potentially a very good buy. I'm going to put this on my watch list as well, MRVL. And I think that this might be a winner when it comes time to look at a chip stock. Let me just see a little bit more, if I can get a little bit more information on Marvell, if they have anything coming out. I just want to kind of look at to see what their earnings date is. This is also very important when you're looking at a stock, to see that you're not buying it right before earnings. And it does look really good on that. So let me go and show you that as well. Here we go on that. The EPS date's out, so it's basically announced. It's currently August 29th is the earnings date. Okay, its growth rate's a little bit slow, but it looks like it's looking very, very good. It's not first in its group though. Let me see if I can give you some alternatives, that other ones that you might want to watch this beside, as well as Marvell. As well. Let me see if I can pull up another one here real quick for you. Symbol. Yeah, this is Monolithic Power. I think this is a little better stock. It's a lot more expensive stock, so this, I may be out of bounds by suggesting this one. This is the number one in the group, and it's called Monolithic Power Systems. And basically, they provide they provide power for semiconductors in very small packages. So it's basically LED drivers, that kind of thing. Very, very strong. It's up $2.30 today. This is sort of the leader in that space. So Marvell, it's in a very good space. So I definitely recommend Marvell. It's not the top rated stock though in its category. So that's something that I kind of want to be show be upfront with here as well. So let's see. Is there wow, there are 125 million Bitcoins in circulation. Wow. Okay. Well, I'm not sure about total number of Bitcoins. I used to know this. That sounds about right. That sounds about right. The problem I see with Bitcoins is that I do think that it's better to play this indirectly through GBTC, because they do hold about 4% of all the Bitcoins in the world. So I think that's a better way to do it than to actually do it the Bitcoin by Bitcoins itself, because Bitcoins typically are not spent. They're basically traded and they're hedged against currency. So I think that GBTC is probably a safer way to trade that. But that sounds about right. It sounds like they're about 125 million Bitcoins currently. All right. So of Dogecoin. I don't know the other coins out there that much. I mean, it's a low risk, high reward and everything. Well, I don't know about Bitcoin and the stable coins being that low risk because we've had pushback from a lot of the governments. It's true. I mean, Venezuela has wanted to create this thing called the petro, which nobody wants, and it's not totally fiat money like most currencies like the dollar, but the governments don't like the competition, unfortunately. I think the safer way to play it, if you're going to play it at all, is with the GBTC, the ETF that holds them, the Bitcoins. NVIDIA, 450 by January. See lots of buying. Let me look at NVIDIA again. I pulled up NVIDIA before. I just want to look at a longer term chart on this one, NVDA. NVIDIA, I could see it going to that level, but I just want to take a look at the trend on the chart first before I say that emphatically. So here we go. Let's pull up the weekly chart here. Oops, there we go. This could go, yeah, this definitely could go to 450. I don't know by January. Here we go. Let's see if I can pull that up. There we go. And switch back over to there. All right. We'll get there by January. This is the weekly chart, by the way. So this is, okay, so that would be this next quarter. Okay, so we're looking about 2 quarters here. It's been increasing about, easily. Yeah, the trend line definitely is there to about 450. Yeah, I think it's very, very possible if it continues on this trend line that it could absolutely be at 450 by January, early January. Yeah, I see that. As long as it doesn't break this trend line, and it looks pretty strong because it's above the 40-day moving average. Yeah, I think that has a high potential of doing that. It's also got, and this is what I'm really looking for in terms of trend, is the relative strength. It's a relative strength of 96. So that means it's outperforming all but 4% of the stocks. And that typically is the sweet spot. You're seeing most of the action in this market basically in the top 5% of the market. That's why companies like Tesla are doing so well. So if you want to see kind of the future, where the market is showing the future, you want to look at a very, very strong relative strength, 90 or better. That's typically going to show you where the money is flowing in the market. Not just that it's flowing into the market, which sectors it's flowing into the market. And so I think there's a high likelihood that you are going to see that at 450 by January. NVIDIA, NVDA. What is your all-time favorite stock? Well, it's hard to say what my all-time favorite stock is. Currently, my all-time favorite stock has been Tesla. I cannot believe it. I've been buying it and selling it since the first pivot, which was in December at 361. That's when I started selling it. Now, I sold out of Tesla in early January when it hit 960. There was a blow off top based because they had shorts that were wound out of the stock, and I sold it then. I then came back in. I then came back in when the second pivot was put in. The second pivot, which is moving off of right now, is 869. That is the second pivot. I think there even may be a third pivot. Who knows? I was seeing resistance at 1,000. When it broke through $1,000 last week, I was a buyer, and it has gone up 30% since last week, if you can believe that. I think it is headed towards 2,000 now. The question is when it'll get there. I mean, everybody's saying that it's going to get there in 3 years. I don't think it's going to be 3 years because it's more like 3 months, if that. So currently, that is my favorite stock out there. Is Tesla. The problem is it's getting expensive. It's getting hard to buy. It's getting like Amazon. And I don't like that because it keeps so many people out of the market. They just can't buy in. With Tesla, I would even consider buying 1 or 2 shares. I do think they're going to split it. Who knows when? And that's just speculation on my part. But I do think they're going to split it. I do think it shows The reason I think that people are coming around and moving into Tesla is because it represents one of the largest addressable markets there is right now. And electric vehicles are going to be huge. Everybody knows it. All the big manufacturers are trying to get into the space, but basically the leadership is totally Tesla right now. And another thing is that basically all the big manufacturers are paying Tesla because they're buying the renewable energy credits, the RECs, from Tesla. So basically, many of the other companies are subsidizing Tesla's growth. So these are the things I like. Now that's going to end next year, but I think by that time they will have captured a large portion of the market. Currently, they do no advertising, and their reservations are totally selling out. They take reservations basically for every vehicle, and they have a full order book. So they're basically selling as fast as they're producing. That's why I like Tesla so much, at least for right now. So that's not necessarily all-time favorite, but by the way, my old all-time favorite was Microsoft, and I started trading that when it exceeded $68 about 3 years ago. And it had taken 18 years to get to that level from basically December 31st of 1999 all the way. It took 18 years to get back to the level that it was at December 31st, 1999. This is Microsoft. I started trading it when it got to a new high. This also illustrates something very important. When stocks make a higher high, that's when you want to buy them. I know that people want to buy stock on sale. They want to buy stuff that's cheap, but in this market, you want to try to look for the stocks that are making their new highs, because that's typically showing where the market is going. So just FYI on that. Okay, let's see. What about Shopify? Oh, I had some January 500 calls. Wow, that is great. This is another one of those stocks that I just think is tremendous. This is probably the most valuable, or one of the most valuable stocks that's based in Canada. The thing about Shopify is that it is everybody that's basically having to go online. And basically, in the future, all the small merchants are going to have to go online, either on Shopify or something else. Now, there is a way around this. Boy, look at this. It's up $27 today. Man, this is awesome. So you have some 500 calls, 500 January calls. Wow, you're making some serious money. Those are worth a lot of money. Those are worth a lot of money right now. Congratulations. That's an excellent trade. I just wanted to say that's an excellent trade if you have some 500 Shopify calls right now. Another one that's sort of an old favorite of mine, though it's not nearly as stellar as Shopify, is eBay. It's sort of coming back. I know it was sort of left for dead. I do think it's coming back. I do think it has some legs, and I kind of want to show you eBay, the chart on eBay, which I think is really viable at this point. As you can see, it's moved to the weekly, because that's the real way that you can get an idea on that. Yeah, look at that. It's just moved. This is eBay. This is an affordable Shopify. It is not a Shopify. Shopify is still better than eBay. It is. But if you want to buy something that is somewhat affordable, eBay is looking pretty good. And it is still, in the buy range. It's got an excellent chart. It's made a new high. It was really started to be buyable right at about this $43, $44 level. Now that it's above that, you're going to see it probably move even higher. So let me put that back onto that chart, back onto Shopify, to eBay, so you can see it in the chart. eBay. There you go. Yeah, it's at 57. I think it's very viable at this level. And, I don't know how many people's radar it's on, but I do think that, we're going to see a renaissance in eBay. And this is one. If you can't buy Shopify now, obviously Shopify is the way to go. It's the best of the two. But, this one, eBay, is going to give you a very nice pop. And I think it's a tremendous chart. It's number 5 in the category. Alibaba is the number 1. But I think, for $57, you're not going to get a better deal in terms of a internet marketplace stock like that. So I just wanted to point that out to you. Okay, let's see. NIO. Okay, here's the thing about NIO. I know there's been a lot of hype on NIO. I just don't think it's going to do as well as I just don't think it's going to do as well as Tesla. And the reason is because I don't see them not just making the electric vehicle. It's the software and everything else that goes with it that I think that Tesla really has down. And it's really reflected in the stock price as well. This is by the way, for you people that don't know about the stock, this is a Chinese-based company that does do electric vehicles. I don't particularly like this chart. It's a little bit too choppy. You see, it started way up, it went way down. I don't like to see that. I like to see a chart that trends from lower left to upper right. I like to see that. But it does have a 91 composite rating, which is excellent. It's also $13, which is up $14 today, which is excellent. Here's the thing. There is just so much difference between these two stocks. If you'll notice, NIO is ranked number 2 and Tesla's ranked number 1. I don't really think that there is a 1, 2, or I don't think there really is a 2, 3, 4, 5. I think basically Tesla's number 1 and NIO is the next closest. It's about 100. Okay, and I think that's relative to the price. You might be able to make a quick hit on NIO, but it is not an investment for the long term. If you could buy any shares of Tesla, I think it's better than almost any shares of NIO. Just my opinion, but I do think it's bared out in the stock price. What's going to happen with Tesla is we're looking at a situation where many of the large funds are going to have to buy Tesla, and I think that's coming. So, I do think that Tesla probably is going to be moving higher on that. Okay, so it's almost an hour. I've almost been with you for an hour, so I appreciate everybody taking a look here. Just wanted to kind of give you some more information on how you can do my stock alerts. They are available at www.dallastradingfloor.com, and also just give you some contact information. Trade floors are available. If you want to just email me directly, it's dallastradingfloor@gmail.com. My name is Jim Malone. The number here in Dallas is 214-233-5087. If I don't answer right away, I'll just leave a message and I'll try to get back with you as soon as I can. Those are great ways to get in touch with me here at Dallas Trading Floor. So also for everybody out there on TikTok, and in order to, you can easily sign up for the trade alerts. Just go to my profile, hit on the link, and it'll take you right to the page where you can sign up. Thanks again for everybody taking a look. I'll be on tomorrow, Wednesday. I'll be on at 2:30 Central Daylight Time. So till then, everybody, happy trading, and I hope that the market treats you well. I'll be back here at 2:30 tomorrow. Bye for now.